Okay, so what are the Reits ETF? Okay, basically, I think by now you all should know what a ETF is. So ETF is basically a fund. Okay, it's actually a fund that invests in REITs lah. So it's like if you actually buy into REITs, you're buying a basket of properties. If you're buying the REITs ETF, you're buying a basket of REITs. So basically, you're buying a basket of properties. So if you buy the REITs ETF, you're actually buying a lot of properties. So just to give you some context here, like for example, Lion Philippe S3 ETF, within each you have about 25, 26 REITs. Inside this ETF, there's about 25, 26 REITs. So once you buy into this ETF, okay, you are indirectly owning that 25, 26 REITs. So you get immediate diversification very quickly. So of course, the portion of the REITs that you own is actually very small. Okay, so that's what ETF does for you. So really help you to diversify very quickly. Currently listed in the SGX market, there are 5 REITs ETF. So these are the 5. Lion Philippe, okay, CSOC IHS REIT Leader ETF, Nicole AM, Swiss Trading, so Philippe SGX APAC Dividend, UOB Asia Pacific Green REIT ETF. So today's session is not so much about which is better, which one should you choose from. Really is about me introducing this ETF to you, where you can find more information. Then you have to ask yourself, does it contribute to your investment objective? Does it help you? So frankly, personally, I am also not really a fan of ETF. Later I'll explain a little bit more. Not that it's no good. It's just that based on what I can do for myself, I don't see why I want to pay additional cost to them. So I explain further. But if let's say, for example, you think that, it's so difficult to build a REITs portfolio, you have no time, you have no energy, then maybe this one suits you better. Also, again, no such thing as good or bad. Okay, it's only whether is it more suitable for you. Okay, why do I actually want to bring up this topic? For a very obvious reason. So the REITs has been quite beaten down this year. Okay, REITs has been quite beaten down this year, mainly due to the interest rates. Now, by the way, just to give you some background, with the interest rate increase, is the dividend affected, not? Yes or no? That means the total amount of dividend payable, is it affected with the interest rate increase? Yes or no? Can I just get your response? So of course, we all know that interest rate has went up. Okay, so yes, interest rate has went up. Okay, the finance cost has gone up for a lot of REITs. Okay, so even though that a lot of them, they are on fixed interest rates, so easily most of the REITs they are like 70-80% on fixed interest rate, but the amount of dividend are also affected. Okay, but please take note, it doesn't mean that is very significant, like I said, because a lot of them are actually fixed. A lot of them are actually on fixed interest rate. Okay, so because of the increase in interest rate, yes, indeed, their dividend is actually being affected. But having said that, it's not significant 2 ways. One is, of course, it's fixed. The others is because the rental has also went up. I hope you understand the story behind. Okay, why we actually interest rates increase, because of what? Because of inflation. And rental itself, it has also been inflating. Rental also went up. So this is what I really want to say here is this: it's not like oh dear, with the interest rate increase is the end of the REITs. No. Yes, there is in the interest rate increase, there is some direct impact on the REITs, but I will actually say that overall is actually not so significant. Okay, the REITs are actually still performing okay. Okay, now coupled by the fact that the REITs price has came down. Okay, a lot of the REITs are actually trading at below book value, below book value. Okay, as you know, properties, in fact, if you talk about the property value, it actually did not come down. Okay, property value did not come down. Yes, the REITs price came down, but if you talk about the physical property value, it did not come down. So I would think that now the REITs, it actually presenting itself some opportunities. Okay, so just to summarize what I've said just now, okay, why the price drop, interest rate went up. Okay, but interest rate up, does it impact the REIT? Yes. Okay, does it impact the dividend? Yes. Okay, but it's not like giving a big blow lah. Okay, in fact, the impact I would say is not so significant. Why? Okay, number one, the rental also went up. Number two, a lot of the loans are actually on fixed rate. Okay, so I would think that this price down to a certain extent is knee-jerk, or either that is oversold. Okay, especially when based on the book value. Based on the book value, now a lot of the REITs are trading below book value right now. So this is the reason why I think we shouldn't just stay away from REITs. We shouldn't say that, oh, that's it, that's the end of REITs. I really don't think so. Property as a vehicle has been proven that long-term wise is actually still good to invest in, especially this kind of timing. Okay, you can see this is a 5-year chart that is actually trading quite near to their low. Okay, this is the period I think we can pay attention to REITs. Of course, I've always been paying attention. I think this period is worthwhile to even pay a little bit more attention. And of course, we have always been looking at individual REITs. And if let's say you don't know which REITs to buy, or if you are greedy, you want to buy a lot of REITs at the same time, so this is where the REITs ETF come in. So that is the reason why I actually chose this topic today. So like I said, you know, all this investment gathering is also based on the current situation, or what I will do based on current situation, what opportunities I see that present itself. Okay, the first document you want to find out about REITs is probably this one. So where I actually got this information from, okay, this one actually gives the overview about the 5 REITs. So where do I actually get this information? You can actually get it from the SGX website. Okay, I have recorded. Yeah. Okay, yes, I have recorded. Okay, hold on, let me just confirm. Okay, it's recording. So that if let's say you want to trace back, how do I actually get to the website, you can know. So you go to sgx.com. Under securities, go to research and education under sector. Okay, so there's actually this thing called the S Street Property Trust Chart Book. It's updated on a monthly basis. So this is where I get the information about the REITs ETF. Okay, you actually go all the way down. So they actually tell you about all the 5 REITs ETF. So like I say, it's updated on monthly basis. So it's actually good if let's say when it's time for you to buy, you may want to just come to this website. Yeah. How come suddenly so many people left? What is happening? Okay, anyway. Okay, I just want to show you about the pricing with regards to the book value since I'm on this. So basically, this is a report on REITs. Okay. So what you have here is this, the green line here. The green line is the index price to book value. So basically, there is a REITs index, the price to book. As you can see, the price to book is at one of the lowest point, and it's definitely below 1. Okay, definitely below 1. So this is 0.95. Okay, that's why I think REITs is getting quite interesting. So this blue line, okay, is the dividend yield. Dividend yield is actually quite high now, especially based on the current price. if you actually look at the U spread, now this is the U spread. Okay. Okay, by the way, for the U spread, we prefer higher better or lower better. U spread. The U spread is basically the difference between the dividend yield versus the bond yield. Do we prefer higher better or lower better? Can I just get some response from the chat? Higher, thank you so much. So, yep, it's climbing up. It's climbing up. Yeah, I think the bond yield is probably tapering off already. So I think REITs should be actually getting quite interesting. Okay, so this is one, you can get this report. Okay, I'm just sharing where you can actually get this report. Is under the SGX website under the sector. Let me just go back to my slides. Okay, now come back to the ETF. So there are 5 REITs ETF. Okay, Lion Philipp, CSOP, Nikko AM, Philipp, and UOB. Now for pure Singapore REITs, there's only 2. Okay, if you just want to buy REITs that is listed in Singapore, there's only 2. So Lion Philipp and CSOP. So for the rest of the 3, as you can see here, they have REITs from different places. So Nikko AM, 72% from Singapore. Then you have REITs from South Korea, Hong Kong, Malaysia, India, China. Philipp SGX, Singapore only 29%. Okay, mainly is Australian REITs. UOB Asia Pacific. So Japan REITs is the dominant one. Singapore only 17%. Also, please take note, it is not like the STI ETF. Okay, STI ETF all the same. Okay, all the components are same. For the REITs ETF, is actually different. So if you want Singapore REITs, there's only 2 of them. Okay. So now the other thing, okay, some of the important numbers to look at here is one is this thing called the AUM. AUM is the asset under management. It actually shows how big the fund is. Generally speaking, we want the fund to be the larger the better. Okay, larger the better. So that is actually more economies of scale. Like for example, you run the fund at some fixed costs. Like for example, you want to pay a compliance fee, you want to employ a compliance director. So if your fund size is larger, so the expense is actually lesser. Okay, in that sense, okay, you can actually, or either that like research fund size is larger, they can afford to employ a better researchers, so and so forth. So my general rule of thumb here is this, I will only go for AUM above 50 million. 50. Okay, 50. So this is probably a little bit too small for me. Okay, I will only go for AUM above 50 million. So the other reason I want to go for large AUM is for liquidity. To avoid liquidity risk. What is liquidity risk? Basically is when you want to buy, someone is there to sell to you. When you want to sell, someone is there to buy for you. So if let's say the AUM is too small, we can have an issue whereby you want to sell, nobody want to buy from you. Okay, so if let's say that happens, let's say for example, you own a REITs, the AUM too small, you want to sell, nobody want to buy from you, then what can you do? If you really, really want to sell, then what can you do? Anyone can help me here? If you want to sell, but nobody want to buy from you, and you really, really want to sell, so what can you do? Okay, thank you so much. You have to keep reducing the price. Okay, you have to keep dropping the price. So that's why to make sure you have ETF, there's enough liquidity, you go for higher AUM. Okay, so down here, this one actually shows the number of REITs that they're holding. So like I said, if you just buy the Lion Philipp, immediately you own 26 REITs. So then they of course also give dividends. This is the past 12-month dividend yield. So it's not too bad now, 5.29%. I think it's not too bad from a mixture of 26 REITs. So semi-annual, bid-ask spread now. So this is the reason why personally I am not a super fan for ETF. Okay, so all these fund manager, they definitely don't work for free. So you actually have a physical people helping you to manage the fund. And of course, the fund, there's some expenses. So they definitely don't work for free. So basically, there is a fee payable on an annual basis. But please take note that it doesn't mean that you have to keep paying every year. So where will they deduct this fee from? Anyone can make a guess? So how do they actually, where does the fund manager collect this fee? Anyone can make a guess? Okay, so basically it's not from your pocket. After you buy, that's it. You're not going to pay any more money. But every year you're paying the fund manager this fee. So where does the fund manager get this money from? Thank you so much. They actually get it from the dividends. So basically, your dividends is minus off this amount. Okay. In that sense, you could actually get a higher dividend yield like 5.8%, 5.8%, or 5.9% in this case, but 0.6% are actually given out. Okay. So whether is this negative or not depends on your time. Like I said, personally, I have the time to go and analyze REITs. And I think to me 0.6 is quite significant. So I am definitely not a fan. Yeah, definitely not a fan of this. But if let's say, for example, you're someone who think that, okay, I want to trust a professional, of course, you employ people to pay them, you think 0.6 is worth it, then of course it's actually okay. It's actually not too bad. Given that is only about less than 10% of what you're getting. Okay. So the rest are actually quite standard. So of course, these are the top 5 constituent stocks. So again, these are the two. The rest, the same. So you can see the expense ratio for those like these two is actually can be quite high. 0.95, can you see? This one is up to 2%. So something to take note of. I think this one is actually on the high side, but they actually invest in more exotic stuff. Okay, so like REITs from other countries. So if you really want more REITs from Japan, Australia, you have no choice. Okay, but take note of that. The expense ratio is actually quite high. So you can see here is this for down here. Yeah, down here predominantly still Singapore. Link REIT is actually from Hong Kong. But once you look at this APAC dividend, you can see that mostly are not from Singapore REITs. So if you actually want to invest in overseas REITs, these two are choices you can choose from. Okay. Any questions so far? So feel free to ask any questions. So this is the first thing you may actually want to look at if you understand the ETF. Okay, 5 of them, only 2 SG REITs. Take note of the expense ratio. So by the way, this is already net of the expense. Okay, this is already net of the expense. It's not, you will be getting 5.29%, at least based on this chart. It's not that, you'll get 5.29 minus 0.6. No, this is already net of the 0.6%. Okay. Anybody, any questions? If you want, unmute yourself, type in the chat. I will reply to you. Okay. Why Philip ETF dividend so low? Yeah. Okay, so as you can see, like for example, Australia, Hong Kong, their dividend yield may have dropped quite a bit because of COVID. Okay, only Singapore, you can see that the office crowd is going back. Okay, like what happened in the US, we actually talked about it in the last meeting. A lot of US, the offices are actually quite vacant right now. They actually work from home. They like it so much. They are not going back to the office. So that may have happened in Australia. Hong Kong is hollowing out. I think if you have been following Hong Kong, the office vacancy rate is also getting higher. A lot of companies are actually leaving Hong Kong. So I think that is a contributing factor for the low dividend yield. Okay, so hope I answer your question. So now for the Singapore one, it's actually still quite healthy. What does index means under dividend? Okay. Now, okay, for ETF, in fact, most of the ETF, they actually just replicate index. Okay, thanks for the question. So this is actually quite interesting here. So in the market, there is actually a lot of indices or index. So of course, the most common one is STI. I think everybody know what index means right now. Anybody need me to explain what is an index? If you want me to explain what's index type 1, anyone? No, okay. So basically, beside STI index, there are a lot of other indices. Okay, there are companies that actually form indices. So as you can see, if you actually go to SGX website, there's actually a lot of index. So of course, the main one is STI. Then you have all this a lot of different index. Okay, so you cannot buy directly into STI. Cannot buy directly into an index. So let's say, for example, I want to invest in STI. You cannot say that I buy STI. It's not available for sale. If you actually want to invest in STI component stocks, you have to do it through ETF. Okay, so what exchange traded fund does is this: it actually try to mirror the index. That's what the ETF does. So most of the ETF, they actually mirror indices. Okay, so when down here, when it actually says, okay, down here, it actually says index. That means it's the dividend for the index. So what happened here is this. This is actually still quite new. They probably don't have enough records. So that's why they actually base it on the dividend of the index, not on the fund itself. You can see is actually for the newer ones. Okay, so this 5.06 is actually based, it's not the actual, later I got a chart to show that it's easier. It's actually not based on the actual fund dividend. It's actually based on the index dividend. Okay, so that is what it means here. Sukit, did I answer a question or you want to add on any clarification? Okay, great. Thank you so much. So feel free to get your questions to come in. So this is the first document you want to look at when you want to learn about ETF. Okay, next, of course, we are there for the dividends. So you want to find out, if you want to find out detail of the dividends, you can again go to the SGX website. Okay, let me share with you how you actually pull out this data here. So what I did is I actually did for Lion Philippe S Street. Okay, again, let me just show you where I get all this information. You can go to securities, go to sgx.com. Okay. So same as the stocks, you can just look at the corporate action. Then you can key in Philip. Okay, Lion Philippe S Street. So they will actually tell you what are the dividends that are being distributed. So as per what it says, is actually semi-annual dividends. So this one in 2002, sorry, they actually pay dividends in August and February. February and August, as you can see here. So in fact, every year they actually pay February and August. Okay. So if you want, you can tabulate out the dividends. And so I've actually done some tabulation. Now, this is what happened here. Okay, you understand now. So basically, this fund buy into the Reits. So number one, the Reits dividend go to the fund. Okay, the Reits dividend go to the fund. Okay, it doesn't mean that the fund have to distribute all the dividends. Okay, like what Lion Philippe S Street down here is this. Can you see the number is so nice? 5 cents dividend. Okay, it's not that they collect 5 cents dividend from all the REITs. No. Okay, what happened here is this. They actually kept some cash. Of course, some of the dividends they collect from the REITs is actually used to pay themselves. They pay the expense. Okay. Then after that, they can choose to keep some cash if they want to and distribute the remaining. Okay. But generally speaking, most of the dividends will be distributed to you, the ETF holder. Okay, so what I'm trying to reiterate here is this 5 cents may not be all the money that they've collected. They could actually like keep some cash themselves, okay, within the fund. So of course, this money can be distributed to you later, or either that is actually being used to buy more units. Okay, so that of course, long-term wise, you have more dividends. So that is another page. Okay, so this page, if you want to find out the details of the dividends, if you actually want to find out the details of dividend, where it's actually being paid, so on and so forth, corporate action, then after that, you just type the name here. So let's say, for example, CSOP IH. Okay, you can actually get the details of the dividend distribution here. Okay, again, just type in questions if you have any. Okay, the next one you can look at is, of course, the price movement. So I use a line as a Philip S. Reed again, an example. Where do you get this information? You can actually get it from, here's how I do it, securities prices. Then you look under down here, you can look under REITs, you can look under ETFs. Okay, ETF, okay, then look for the REITs, like for example, down here, Lion Philip S. REITs. Okay, then you can look at some of the information here. Fire charts, from here you can see that, yeah, it's probably at one of the lowest point. The pricing is actually one of the lowest points. So of course, so for whatever reason, if you think that REITs will drop further, yeah, maybe not a good time to look at. But if you ask me, now the pricing is quite attractive. So this is where I got this chart. If you're interested to know the price movement of the REITs over the time. Okay. So once again, I'm just sharing you where are all the places you can get information about ETF. Number one is this, the report, the sector report. Okay. Number two, if you want the dividend distribution. Number three, if you want to look at the price chart. Okay. Now, number four, yeah, this is one report that I will strongly encourage you all to read at least once. Okay. So there's actually this monthly report on REITs. Monthly report on REITs. We actually give you some details of the ETF. Okay. The new thing I look at is the securities holdings. What are the REITs that they are holding? Then of course you ask yourself, are you okay with them? Like down here, personally, I won't be very happy with like, for example, Manulife and Cromwell, but you can see that the location is actually not much. So these are all the, they have 26, right? These are all the 26 holdings that they have. And you can see that they actually also hold cash. They also hold cash. Okay. The other one is the performance. Now, for fund performance, what they do is they compare with the benchmark. They compare with the benchmark to actually rate the fund. Okay, now take a close look. Take a close look. The REIT, so of course, this is the S-REIT ETF. This is the benchmark. Did the REIT outperform the benchmark or underperform? Okay, did this S-REIT outperform or underperform? Okay, underperform. Okay. Okay, but to be fair to them, this is actually quite common. Okay, one of the reasons is because a lot of benchmark is the actual index. And of course, for the REITs, right, you have to collect fees, collect fees. So that's why it's actually quite common to underperform, but you make sure it's not very significant. I think that this one probably is actually still can accept. So like for example, okay, this benchmark is usually the index that they actually try to emulate. What benchmark is that? That is okay. Let me see. Let us go to the report, then we can see whether we have that detail. So again, where do I get this report? Is you go to sgx.com, securities, there is a ETF screener. Okay, ETF screener. So we can look for Lion Philip. Okay, Lion Philip S Street. Okay, you click on this PDF button. So you have all the information. So of course, the most updated one is this monthly report. The rest can be a little bit old. Okay, let's see down here. Can I find what is the benchmark that they are looking at? Okay, let me blow this up a little bit more. Okay, so in that case, the two main information I want to look at here is this: the holdings. Am I okay with the REITs that they're holding? And number two, the benchmark. Let's see. Did they say what benchmark they're looking at? Okay, Morningstar Singapore REIT U Focus Index. So this is the benchmark. Chun Woon, hope I answered your question. So if you actually want to see what index do they follow, so this is the benchmark. Okay. Yeah. So far what I see is that usually it's very hard to surpass. Okay, for obvious reason, right? For the index is actually without the expense. The REITs is actually including the expense. So there would be some differences. There would be some differences. Also, the thing is, you actually wouldn't want to see that it's very significant. Okay, I think this is something that is acceptable. 10%, but actually is about there. Okay, why I say it's about there, answer to Indra's question. If you think about it, okay, this one is also about 10%. Can you see the expense ratio is also about 10%? Okay, so if you just go by the rough number, yeah, it's about there. Okay, so that is something to take note of. Also, these are the two things. One is the fund, what are they holding? The other is the performance. Okay, by the way, so this is generally for most of the ETFs. Most of the ETFs, if you let's say, for example, you want to want some detail information, okay, you look at this monthly report, the holdings, and of course to look at their performance. Okay, so I really urge you to read this at least once. Of course, if you like, there are a lot of other information you can see here: the prospectus, the product highlight sheet, seminar annual reports, so on and so forth. For those who actually want to see how they also have things like balance sheet, P&L statement. So it's actually all there. Okay, if you're interested, this is where you can get the information. Okay, the income, the dividends come from the REITs. So these are all the expenses. Or if you're interested to know how do they actually allocate, how is the money being used, they also have a they also have annual report in that sense. They also have annual report in that sense. So where do I actually get this? Is under the ETF screener. Okay, down here. Okay, but don't try to do the 6 tests, things like that. Nah. It doesn't really make sense because this is the fun of fun. Okay, sorry, this is the fun of the product. So you can't really do all the 6 tests, things like that, so on and so forth. Okay. And yes, is performance NAV increase plus dividend or just dividends? Okay, Sarinta, where do you find this performance NAV?
No, what I mean is, when you say performance, are you talking about capital gain plus dividends?
Performance of what?
I mean, you were talking about the performance of the
In terms of the benchmark, is it?
Yeah.
Okay, so for this one is probably just the price of the REITs.
Oh, okay.
Yeah, she said should be just based on the price on the REITs, correct? Yeah. Because this is index, ma. This is index. Index, they wouldn't reflect. So index, they just based on the price, so they wouldn't reflect dividends.
Okay, thanks.
Yeah, yeah. Okay, thanks for the question. Okay. Yep, so these are all the information that if you want to find out more about the ETF. So one is the sector report. Number 2 is the dividend. 3 is the price chart. 4 is the monthly report. So these are the 4 main instruments. So of course, what I've done here is this, I actually pull out some of the key information about these 5 REITs. So if let's say, for example, I want to decide, okay, I think the REITs is actually quite good to go in now. So how would I decide? So this is me. So this is me. So number 1, I actually list down the 5 different REITs. Some of the key numbers I look at. So these are the dividends. Now you can see that for local REITs base versus those with overseas. Okay, just look at the trend. So of course, the CSOP is quite new. They are only listed in 2021, so I don't have the past 3-year figure, but Lion Philippe I have. This is the dividend that you'll be getting if you actually bought Lion Philippe over the past 3 years. Maybe we just, if you can compare with the rest, which one has a more steady dividends? The local ones, only with local REITs, or those with foreign REITs? In terms of the dividend trend, which one is actually more stable? Local or the foreign ones? Okay, thank you so much. It's actually the local one. So if let's say, for example, you are more keen on steady dividends. Okay, what you're looking for is steady dividends. Then of course you may want to focus on these two These 2 REITs. And between Lion Philippe and CSOP, personally, I would go for Lion Philippe. But anybody want to guess why? Let's say these 2. Between Lion Philippe and CSOP, I personally will thank you so much because of the AUM. Okay. Now, foreign REITs, as you can see, the returns are more volatile. Because of COVID, the yield actually came down quite sharply. Then I can see that they're slowly recovering. But having said that, okay, this being foreign REITs, they may is higher risk, high return. They may have higher potential for growth. That one, so that is usually, if you talk about foreign REITs, okay, they may have higher potential for growth. So if you're willing to take higher risks, if you don't mind volatility, then maybe the foreign REITs may actually be quite interesting to you. Okay. Like, for example, this Nikko AM1 can now give about 5.7% yield. I think is also quite decent. So this 2 is NA is because they are newly listed. They only listed in 2021, so they don't have the full year dividends. So that's why I actually didn't get the figures. So down here, I just want to show you the local REITs. the dividend tend to be more stable. Whereas for the foreign ones, they tend to be more volatile. If you are looking for growth, may want to consider the foreign ones. If you are just there, buy REITs, stable, steady, then maybe the local ones may suit you better. Okay, I want to explain this term called NAV here, net asset value. Okay, now for ETF, okay, maybe you'll make a guess here. Okay, so for this NAV, is it based on the REITs price, or is it based on the property of the REITs? Okay, help me type in 1 if you think that this NAV is actually based on the REITs price. Type in 2 if you think that it's actually based on the property of the REITs. Okay, this NAV here, this is for NAV or ETF. This is the NAV for ETF, NAV of the ETF. Is it 1 based on the price of the REITs, or 2 based on the property of the REITs? Okay, I'm talking about NAV of the ETF. Okay, answer is 1. Thank you so much for participating. Answer is actually 1. It's actually based on the price of the REITs. Okay, so please take note, for the NAV of ETF is actually based on the price of the underlying stocks. In this case, it's the price of the underlying REITs. Okay, so that is why you can see that it's always quite close. The price is always quite close. So you can see this one, in fact, is exactly the same. It's actually quite close. So of course, if it's lower, that means it's cheaper, but then is, as you can see, also not very significant. So generally speaking, it's quite close to the price. Also something to take note of. So unlike, like, for example, stocks, we can compare price to book value or price to NAV. Their NAV is actually based on the underlying assets. Like if I look at the NAV for REITs, then it's really look at the properties. But when I actually look at the NAV of the funds, so it's actually based on the price. So beware of that. Okay. So in that sense, NAV may not be a very good gauge to help to see whether is it cheap or expensive. Because most of the time, by right, it should be about the same. Okay. I just want to highlight this point. So this is the yield. If you realize there is actually some difference, I think it's actually due to the timing issue. So there's actually some difference compared to the numbers here. Okay, like Lion Philip down here is 5.29. When I actually calculated, is actually 5.5. That means the price have actually came down a little bit compared to the time of the report. So I did take the 5 cents here, divide by 0.9. The price I actually get it today to get 5.5%. Okay. So personally, I will find these two REITs quite interesting, Lion Philip and Nico AM. Okay. If I am there for steady dividends, maybe Lion Philip. If I want to take a bit of risk, hopefully can get more dividend in the future, I will go for this one, Nico AM Straits Trading. So this is for ETF. So of course, the other way a lot of people like to play with ETF is do dollar cost averaging. Dollar cost averaging. So let's say you want to have a very passive fund. Okay, like for example, save money for your kids' education. Or either that, every month you just want to invest $200 and you don't care one, or $500, whatever, $1,000. So every month, 1,000. So if you actually want to do very passive, it's actually good to invest in a basket of instruments so that you are less subjected to what we call individual stock risk. So like, for example, if I just invest every month into a particular REIT, okay, like for example, Escort REITs, okay, then if let's say Escort REITs for whatever reason collapse, then all my money is gone. But if I do it on a portfolio through ETF, so even one of the REIT actually don't perform or one of the REIT bankrupt, okay, my portfolio is less affected. Okay, also these are the two main reasons why people use ETF. One is you don't know which REIT to buy. You want to buy everything. You don't mind paying the expense, so you use the ETF. The other one is actually more for dollar cost averaging purposes. Dollar cost averaging purposes. Okay, I just want to buy every month. So in this case, I probably choose between these two. Okay. So that is all I have about REITs ETF. Anybody, any questions for me? So again, I am not doing recommendations. I'm not saying these are the best. In fact, personally, I am, like I said, not that keen because of the expense ratio, because of the expense. And since, hey, I can pick my own REITs, I'm happy to pick, I'm happy with my selection. Why do I actually want to pay this 0.6% extra? Okay. But if let's say you want to do dollar cost averaging, things like that, this actually may come in quite handy.